Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, May the 26th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart, we have wave 1 done. We're working on a wave 2 correction. And the question is, ladies and gentlemen, is this over and we're ready to go blasting off, or we're going to break down? Still not convinced that this is the end and we're ready to go blasting off, but just remember this big picture is for this wave 2 either here or lower down here, certainly somewhere in between. That if this isn't the low, then we go lower, but I don't think we're going to go any lower than this. We may struggle to get to the 618. Maybe we just dip down here to the 50% retracement. But the big trade, when we talked about this many years ago, early 2008, when we bottomed after the big financial crisis, we came down and then we bottomed and we started chugging higher. We talked about going up to 115, 120 as destination. Now the destination, we're looking for a deeper retracement, but sometimes you don't always get those deeper retracements. So I'm not going to say we're definitely not going to go lower, but just remember, I'd be remiss if I didn't tell you that at some point the wave 2 ends, and what happens? We go breaking out. And where are we going to go breaking out to? That 130, 140 target. So jumping into the charting platform, we can, let me see where my charting, there it is over here, charting platform. We can see we're just kind of chugging in this resistance zone, support zone. We came down and dipped down here. Now we rallied up. Do we come back and test this 618 zone and go higher? Or do we break back down, hit this zone, and ultimately go lower low? So as I compress this a little bit, you can see this is the prior lower low. We're saying this could be the end of wave 2. We got an initial move up, 618 retracement, kind of retested it. We're bouncing, but this price action is not overwhelmingly, doesn't give me a warm and fuzzy thing that, man, that's definitely the bottom, ladies and gentlemen. Look at this price action. We did get a 618. We bounced, kind of struggled, retested it, bounced. We're struggling. So as you can see, we got a big resistance zone and a smaller resistance zone. Then we have a big support zone and a smaller support zone, and we happen to be stuck between the two. So that's really not telling us a whole lot right now. What did I say weeks ago? And use my handy dandy arrows. We said weeks ago, we're expecting, while we're stuck between resistance and support, would expect this price just to kind of chop and grind in this zone. And it looks like it's compressing and compacting the channels. We got the outer low down here, the lower low, and we got the higher low up here. Then we had an initial move down to a 618. So we still have this compressing support area. Then as we rallied back up off of that, we have a new resistance zone and it seems to be stuck. So can this break above this zone, get above this prior high? then we're definitely going to this target up here, and we're probably going to push toward that 101 and change, maybe 102. Remember, the big news is the 102. 102 is the short squeeze. The big trade all of last year, got to compress this even further. I love compressing and compacting the charts too. Not only support and resistance channels, but the actual chart view. From this prior high last year, everything was short the dollar, short the dollar, short the dollar. And there's a ton of money shorting the dollar right now. So what do we mean by a short squeeze? If we hit this 102 level, that is going to upset the apple cart, and it's going to do what? Force the squeeze to go higher, and the squeeze is expected to run from 102, probably somewhere around that 105, 106, 105, 106, maybe 107 level. So if we do get this to break out and we hit the short squeeze at 102, slice and dice this. This is a very high probability we get a daily candle body close above 102. We're definitely going to rally somewhere around that 3-point zone to maybe more, but I would expect this to go from 102 and push that 105 level, which happens to be from the prior high to the prior low, that 618 retracement. That's all important. And you can see the 107 goes up here to the 786. So I did stretch this. You're thinking, well, why my little pink box not just on the 618, 786 zone? It is, but I had to stretch this because if you go back in history of the dollar index, that big zone is very powerful. It is an extremely strong battle zone. From the time way back when this first started tallying on this chart, we came down, we kind of found resistance at that zone, went lower, we popped right back up, went to the top of that zone, went lower, popped back in here again, ultimately went lower in the lower 70s. Then we went one of these massive runs to all-time highs, and we went up around that 160 level. Dollar was very strong in the 80s, mid 80s. And then we started to go downhill from there, chopped around, rallied again, went up to the 120 level. Then we made lower low. So the reason I'm looking at this, you got your high, you got your low. I'm looking for some sort of 618 type of retracement off of this prior all-time high to this current 2008, early 2008 zone over here. From that high to this low, Mr. Tucson, what we're looking for, Ian, is simply a 618 retracement. So I believe this is extremely high probability target, somewhere between that 130, 129 and change, and 140 up here. I do think that's where we're headed. The only question is this correction of that wave 2 over? We'll go 3, 4, 5 and make it up here. That is the plan. So when you say, well, what's the percentages? How confident am I we're going to go up here, whether it takes a little bit more downside, but eventually are we going up here? You betcha. I'm about 1,000% confident on 100% scale that we're going to go ripping up here. And just because everybody thinks the dollar is short, this, that, and the other, or because of the Strait of Hormuz, we're going to lose the dollar as the world currency and this, that, and oil and blah, blah, blah. And everybody thinks the dollar is just going down. We got trillions of dollars in debt. So that's exactly the contrarian view. When everybody says we're doomed, what happened? Bam, we go ripping higher. So that's going to catch a lot of folks on the wrong end, but not the GPA trading services, right? We already know where we're headed. The only question is, do we still need to go slight lower low? So what I've been saying for months now, no matter if we go lower low, we're still going up here. No matter if we reach our original target, we're still going up here. Got it? So this is extremely high probability. The only question is, are we going to make another low, or is this the beginning of the bottom and we continue to grind higher? In the interim, be prepared for more sideways chop. Again, we're stuck between resistance, support, and even on this latest bounce the last few weeks, resistance, support, resistance, support. So even if we were to retrace from that prior low up to the high, that makes it a 618 retracement. So if you see price action actually comes back down here, closes below the magic fibbo, it should make a run toward this little 618 zone. And if that doesn't hold, we're going to go lower low, which puts us right in this bigger support zone. But the bottom line is the bottom line. We close below this green box, we're going lower low. We close above this pink box up here, we're going higher high. Got it? The question is, do we get to and close above the 102? So whether this happens next week, next month, even we go into next year, we close above 102, short squeeze is going to push us toward this 105 zone. So that's a great trade. How do you trade something like that? Dollar index, if you know it's going to pop from 102 and start ripping toward 105 or higher, then you could do the ETF, which is a little leveraged ETF, UUP. UUP. UUP would pop on that because whatever the dollar does, UUP is going to do a little times two. So that's one way to play it. Or if you're a big Forex trader, well, I trade all markets, love Forex, always have. I love the markets, always have. And my God-given talent to read and interpret price makes it fun to trade any market, but I digress. But if we close above 102, we're going to 105. Maybe this could be the beginning of that kickoff, and we start breaking above that pink box. And sure enough, years down the road, because I don't think we get above this pink box, we're going to get up to that 130, 140 target in a matter of a few months. I definitely think it's going to take years, but that's just the plan. We'll see how that plays out. But this could be the beginning of that UUP getting a nice pop. And then what if it is a breakout above that 107, 108 zone that sets the tone? We go on 130. That UUP is going to go way higher. Again, it will take years, but that's still the plan. Or do we come up here into the zone, fail, and still go lower low? So the big picture, people say, well, when can I call this a bottom? I've had Gary, when can we call this dollar done and we're ready to go ripping that 130, 140? Again, I'm 1,000% confident on 100% scale. We're ultimately headed that way, but where do we go? Do we break down first? This price action leaves a lot to be desired. We've been discussing that for months, looking at these different lows and saying, well, is this that wave two correction, just a little shy of what we originally talked about? Is this just a shorter term where we got a retracement, we're ready to go bring it out? I said, no, this overlapping pricing said we would go lower low, did it again, perfect three-wave correction, stated we'd go lower low. This last one here, we did the same kind of move, went up, went down, went up, retraced, overlap, went up, retraced, overlap, went up, retraced, overlap, went up. And this thing just kept going. I said, no, still likely going lower low. So we've been spot on month after month after month after month. And I'm still not convinced this is the bottom, but just in the back of your mind, one of these lower lows is going to be the end. And we're ultimately going to get above this big resistance zone. And once we do, it is over. And we're in our journey, multi-year journey up to that 130, 140. So far, so good. So in the interim, we're still stuck. For the last year, this 100.5 area, just under 101, has been resistance. Even when we rallied slightly above it, where did we stop? 102. So you can see why the 102 squeeze is so important. People think this was a rally point that stopped here, and we ultimately went lower, low, lower, low, lower, low. So that's kind of where their line in the sand is, 102. So if it hits 102, what's going to happen? We go ripping higher toward 105. This could be the beginning of that breakout. Ultimately ending this thing could be wave two and we're done. But up and until we get above this, then we can call that. Up until then, we're still thinking more in the opposite direction. From this COVID low up to the high, we use this Fibonacci strategy that says if you get the low and a high or a high and a low, and you ultimately close below, in this case, because we're talking about the low to the high, when we close below the 618 zone, that gives us a 75% chance all this chopping could continue to lead us to a move toward 75% chance we're going to 85. That's still a higher probability. That's the rule. Low to high, you close, not just a dip, a little wick down here, you dip your toe in it. It's the candle body close, but this candle body close has closed below not only a daily chart, a weekly chart, and a monthly chart. We've been below this 98.90 area for a very long time, and only recently off of this bounce are we barely, just by a few inches, right, a couple of ticks, are we above it right now. But you can clearly see we closed below it weeks, days, even months. So we're still more likely we got to go down here to finish this correction. But what if we don't? Because, that's 25%, we're not going to do it. So I'm not saying that I take trades 25% and bet on them heavy. No, I always go the bigger route, 75 and higher. But in this case, if we get above this, it flips the script. Because we get above that, now we're talking, instead of a 75% chance we come visiting down here, we then have a 75% chance we go and visit up here, make that move toward 120 en route to 130, 140, right? So while we're stuck in these support resistance, lower low is still more likely. We break above this, now higher high becomes extremely more likely. Got it? So up and until then, be careful. This has been chopping and grinding, but this is still on the charts right now. And the last thing we had was a close below the 618. And this rally so far, we haven't broken out of that same resistance zone. So it doesn't say, uh-oh. And what is this all-important zone up here? From the prior high to the low, it's the 618-786 zone. You can see it. And from the prior high over here, which is just a tad bit higher, to that low, it still overlaps with the 618. So you can see why I say that, ladies and gentlemen, we close above this 618-786 off of that high, which overlaps with the 618 off of this high here. It's over, right? Then we say in 75%, we go to 118, 70 plus, we go to 120, and onward and upwards toward that 130, 140. So in closing on the dollar index, be careful. There's a lot of chop and grind. I expect more of the same. Yes, every time we think we're going to sell off, we kind of find support. Every time you think we're going to blast off, we find resistance. But this picture solidifies that and shows we're clearly in a chop zone, which is right in the thick of this. Chop, 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 chop. So what happens? Still more likely lower low until price proves otherwise. We get above the smaller pink box, even though I stretched it out a little bit more, it kind of sets the tone. We're probably going to go up to this zone. So we get above this, we go there, we get below that, we go here. And with the onus and the more incentive and still higher probability, this will probably fizzle and go this direction more than we're ready to go blacking out, but it is what it is. What's unique about this service is we give you high probability targets, our primary direction, and we give you alternate directions with critical levels that dictate, well, when am I thinking this has changed? Your alternate direction is up here, and when is it a high probability alternate direction? When you close above that 618 of that prior move, it sets the tone. We're going to go to that 1448, 1272 target up here. All right. So why is it important we know where the dollar's going? Why do we always start with the dollar? When you know where the dollar index is headed, you know where a lot of asset classes are headed. Least, of course, but very obvious is Forex. It's got the dollar in it. So of course it's going to affect the dollar, right? The dollar goes up, the euro dollar goes down. The dollar goes down, the euro dollar goes up. Why? The dollar's in a secondary position. So when the dollar is strong, what happens? Dollar strong, euro dollar's weak because the dollar is in this position. And if the dollar is very weak, what happens? The euro goes up. Inverse relationship. So we showed you on the dollar index that we're stuck between support and resistance. We compact and compress the channels. We got the same thing here. The dollar topped, pushed lower, went to the 618 zone. When the dollar pushed lower, this wing went higher. Then the dollar bounced, the euro went down. It found support. So we're still stuck between support and resistance. Look at this inverse relationship, just looking at this chart. It looks identical, but in the opposite direction, right? When the dollar started ripping higher here, the euro went ripping lower. When the dollar went ripping lower here, the euro went ripping higher. Notice what happened. We retraced to this zone and we touched it, right? We had the initial move up on the dollar, then we retraced to this zone. We had the initial move down on the euro dollar, perfect inverse relationship. And what did the euro? We had this move. And what happened when the dollar went plummeting? Euro went ripping, went right to the resistance zone. The dollar retraced and went up and rallied to what? Its support zone. So yeah, it's perfect inverse. And what this is looking like right now is overlapping action still. So the dollar's not crystal clear with more bias to go lower. Well, this is still not clear right now. It's overlapping. If this is 1, 2, 3, then 4 overlaps with 1. So this is not overwhelming, but remember the bigger picture is even more dramatic on this euro dollar, meaning you go back to that swing point high, swing point low we discussed with the dollar index. From the low to the high, we took out the 618. We hadn't taken out the 786, but we did take out the 618, which says we're likely going lower low. We'll look at the euro in inverse. We had the high, we had the low. We took out this 112.80 zone a long time ago. We tested it way back in 23. Kind of did a 3-wave correction off of that. Then we finally broke above over here in 25, which stated we're more likely going this 127.50, 130, 131 zone because we closed above that 618 here. Well, notice we actually closed above the 786. So what does that mean? The rule is you close above the 618 with a candle body, not a wick, states you're going to go to the 1448, 75% clip. And when you close above the 618, it states you're going to go about 70% of the time, you're going to make a run toward that 1272. Everybody good? So not only did we do that, but later we closed above the 786, which is a reconfirmation, reconfirm. We got a 70% chance, 75 go to 127 area, and a 70% we go into 130. So this is still a higher probability that we're likely going to go test this zone before we go lower low. Why lower low? When the dollar makes its run toward 120, breaking out toward 130, 140, already have the zone. What's the probability we go down here? I'm about 100%, right? 100% scale. I'm about 1,000% confident on 100% scale. We're going to go lower low at 0.8 to maybe 0.7 zone. When is it going to happen? It's going to take years. So do we go up here first before we get down there? The percentages are still higher. We do that, then we're going to break down, but it's still extremely high probability. We're definitely going down here. When does this script flip? Meaning the script right now from that high to that low, we're going to visit 127.50, 130, 131. My big bubble up here. Why I stretch it a little bit more? Because sometimes you make a move up and near that 1618. So this is the zone where we still have a higher probability we're ultimately going to reach before we get down here. But again, we're definitely coming down here. So that needs to be in the back of your mind. At what point do we maybe not reach this and go down? It's this big green box. My big pink box on the dollar index stated that if we get above that, it's over. Well, it would be the euro breaking below this level as the dollar's breaking above that big pink box to say we're going at 130, 140. That would put us in equivalence of the euro dollar going down at 0.8 to 0.7 zone. And again, I'm extremely confident we're going down here. But right now, the market says we really need to go up here first. But again, all roads lead to we're going lower low. But where do we stop? Is this already this little swing point up here in that 121, 122 area where we topped out and we're already starting to break down? Or do we get one more thrust up here? Until price proves otherwise, I'm going with we're going higher. And that's why we've been for 4 years ago, when we got this down in this area and I talked about it, it'd be a good idea, no buy, sell the whole recommendation, but it's a good idea to think about buying the euro dollar long. As the dollar's expected to take that big retracement, the euro is going to take a nice correction higher. And we've been spot on with that. Is it over? It's eventually going to be over. Sure, it's definitely going to be over, and we're coming down here. No question, in my humble opinion. But because of the rules, I follow my rules until price proves otherwise. And right now, we confirmed it and we reconfirmed it. No reason to believe we won't get up here. It could chop, and again, it could take years. What I said here, we're not going to go from here to that target zone in a matter of days, weeks, months. I specifically said it would take years. And we're almost 4 years into this, right around the corner here, 4 years from that bottom. And maybe we got to go a little bit more to get there. Remember, the euro from its all-time high to this low took about 15 years to make that. So it's understandable a correction could take 5 years, a third of that time. And we're just coming in the 4th year. So maybe we dip and then rip into next year, and then we start the big fall as the dollar hits the short squeeze, starts ripping higher, breaks that resistance zone. That's equivalent to this support zone, right? We break below that. Where are we going? Lower low. Highest of highest of highest of highest probabilities. We're going down in his zone, which is 0.8 to 0.7. But up until then, we probably got a higher chance, 75 to 80%. 75% chance here, 70 plus this. We need that to play out. So there you have it. Pound dollar's in the exact same boat. 4 years ago, said, hey, the pound overreacted, got to this 103, and we're going to bounce thousands of pips to the upside before we get lower low. So even the pound has a lower low coming. Highest probability, in my humble opinion, we're definitely coming down here. But the question is this correction over and we end up with a lower high, then the lower low? Or because of the 618 magic, we got the high, we got the low, we took the 618 out. The pound did it early. It did it in 23. The euro only tested that 618 in 23. The pound closed clearly above it. That's a weekly candle body up here. That said, we got a 75% chance we go on about 147.90, basically 148, and a 70 plus we go to 152 and change. So we still got a higher probability we're going up here first because we closed back in 23, July of 23, said we're going up here. Then we kind of chopped and corrected and went higher, and we did the same as the euro dollar. We actually closed above daily candle, weekly candle, all of them, monthly candle. We closed above the 786. So when we did this back in 23, it said we had a 75% chance we're coming up here. And then we reconfirmed that scenario when we closed above the 786, we're going up here. So the plan is to go up here first, then we go reversing down here. Well, what if I'm wrong and we fizzle out here? We end up with a lower high and we do it. We get below this support zone, we're going lower low, period. Got it? So up and until price proves otherwise. That is this support zone. We break below that, it's over, we're going lower low. Otherwise, we're still chopping in this zone. This is still a much higher probability. So what have we been doing for years? Buying the pound dollar. Any of these dips we would buy and go long, and we peg where the targets are. You use previous high, previous low, you hit the 618, 786, you get a correction, then you look for break the 618, you go to the next 618, 786. We did this over and over and over and over in this for the last multiple years, and I'm not convinced it's over until we finish this last push. Then we start breaking back down. Euro yen, pound yen, be careful on these pairs. Yes, the yen is weak. They got some bond issues. They got this. They got all kind of issues. But just like the dollar is weak in this, and I'm telling you the dollar is going to go ripping higher, well, these yen are going to strengthen when we get a financial crisis. That's historically when they strengthen very well. But we're looking for a carry trade unwind. What do people do? They take the yen, very low interest, and they buy during the crypto haven, they would buy Bitcoin, they buy NASDAQ, they buy AI, and they use cheaper money to buy that more higher assets. And what happens when the market starts crashing? We call that a carry trade unwind. What did that do for us? We saw this big plummet coming into this when we saw this beginning here. Doesn't look like too much here, but it was up here. And this is a weekly chart at 175, and we bottomed down at 154. That's over 2,000 pip decline, and that was a matter of a few weeks. That was what the carry trade unwind was in August, right? And then we got the little liberation day coming into here, and what happened there? It sold off big time. So this is going to happen. Mark my words, this rally up, which has been extensive, is ready for a big pullback. Then you start zooming on current price action. We saw this most recently. This does not bode well for this to go breaking out. We have a high, we have a low, kind of rally to that 618, failed. We're just chopping in the zone. Well, what if I'm wrong? Where's the make or break levels? Where's that alternative plan of action? The bias is we're going lower low for now because our high to low, this doesn't look like a appropriate three-wave move. You're in an uptrend, markets move impulsively in 5 waves up, and they correct in 3 waves down, and they continue. Well, this is not appropriate for a 3-wave correction. You say, well, that looks like a 1, a 2, and a 3. But typically, your A equals C. And if this is the A and that's the B, this C is more than 4 times longer than that A. And that is typically not the way that looks. So in my humble opinion, because of that scenario, so how do you do this with Fibonacci's? You take the high, you take the low, and you see the retracement, and then you use a 3.2 Fibonacci extension. High, low, lower, high. We should have come down in equality. So if that's the A, we would have made an equal move. That would have put us right around this zone for equality. But we went not only beyond that, we blew doors and went to further extensions, starting to push a 3618 down there. That is not equality. That's not A equals C. Why am I bringing that up? Because if we're going to continue this rally to go higher, which the yens have been weak and the euro yen's been running and the pound yen's been running, and yeah, but is this finished? No, this looks like this initial move is the A. And this retracement that's struggling looks like we're going to get a little 3-wave B. And then we go down in C. So this is why any rallies in the short term should be looked to be sold, because we have this massive resistance up here. The software wise, we have a monthly that is extremely overbought, right? Got our monthly over here. Let's go to look at the software. And when I look at the software lining up with my technical analysis and critical support and resistance zone, and we look at a monthly up here, let me move this out of your way. That's the daily time frame. So we call this our price magnifier. Tells you what chart you're on, what time frame you're on, what the price is, and how this particular candle on a monthly is either up or down. So for the month, you can see we have a green candle, so this number is green. Pretty cool. So, but you see the monthly is extremely overbought. And the last time we did this monthly starting to turn over, we got that liberation, well, that was the carry trade unwind. And you can see over here, we did it over here, much bigger, way back here in 2007 financial crisis. So what happens when we have a financial crisis? The yen strengthens big time. Notice that move, a massive move lower. So what's coming next? We call it, Elizabeth, I'm coming to join you, honey. That's going to be the next market, financial crisis. It's right around the corner. There are cracks in the foundation. Debt's too high. Could it be the commercial real estate bubble that burst? Over 5 trillion in commercial real estate. What's it going to be? Sooner than later, but no later than later, we're going to get one of those. So this is also setting up a big retracement off of this. So you can see from that initial correction, we're ripping higher. Well, what happened the last time we ripped higher? We got a big correction. What happened the last time we ripped up and hit a financial crisis? Got a huge correction. I digress, but the status is the same. And we're reaching from the high to this low. We're reaching those extensions up here. What typically happens after you reach those extensions, you get a correction. So monthly overbought, weekly's overbought. It's starting to little slingshot, but I'm anticipating this engage, disengage. It's going to turn back down in the direction of the monthly, and we're getting a high, a low, a lower high, a lower low. So in the short term, these little rallies I think should be sold. We already got in this thing on that last Friday. When that ripped down, we got to 500 pips of profit. We're still sitting in profit. I told you everyone to take profits. We're in a position of authority. So what if this thing rips higher? It pips us out for more profit? Great. What am I going to do if this thing rips back up and we get pipped out of that trade? I'm going to get right back into the short side. Because when Elizabeth coming to join you, honey, or we get a little carry trade unwind, this thing's going to drop thousands of pips. Got it? All righty. So let's go back to the charting platform. And we can see that up until we break above this resistance, we do that, we close above it. Yeah, we're definitely going up here. 75%, 188 zone. 70+%, 189 zone. Why I have the, well, that high to that low, this is this number. This other lower high to that same low is this number, and it's overlapping. So we get above resistance, we're going up here. Got it? Otherwise, we can't break this, we're going lower low. So where would the lower low come in? 3-point tool. We have a high, we have a low, we have a lower high. So if this is what I was telling you is correct, that this is not proportionate to be an ABC and we're ready to go blasting off, that this is probably the A initial move, and this is part of that B correction. And then where's equality? Equality's down here at 170, basically 179.80. 179.799, that's 180 to me. To the 10th degree right there. But that says we're more likely going down here, because if that is A and frequently A equals C, then we're going down here. Sometimes A times the 1.272 equals C. So then instead of stopping at that basically 180, we could push a little further down toward this 178, from that 179.79 toward that 178. Now, there's a lot of lines on here, but that's why I'm calling your attention to it. So Mr. Tucson, James, Ian, Alan, Randy, we're going lower low is a higher probability. As long as we're below this resistance, we're going lower low. So any rally should be sold so that we achieve our lower low. And from right now, if we just start going lower now, we're targeting 500 more pips. Over 500 actually, be 600 pips, well, close to 500 plus. And we already started from that swing point low. So we're still in this trade to go, what? Lower low. What happens if we get pipped out? Then I'm going to expect price to go test up here. And when we get toward that 188, 189 zone, I'm going to look to short it again. That's the plan. Pound yen is ditto. It's doing the same thing. Got the massive sell-off, got into major profit. And now we're seeing this looks like the initial move down. That looked very impulsive. And this is the corrective action going back up. So is this part of the initial A? Get my marks a lot there. Is that the A? And this initial move here is the B. So I would expect this rally to turn around somewhere in my pink box. I got a pink box within a pink box. And we would expect to go lower low. And where's lower low? You can see 3-point tool on this one. I'll redo it because this is new high over here now. So we have a high, we have a low, we have a lower high, right? Where would equality be? If this is the A move, this is the B correction, where should C play out? 208.60. Maybe we push toward the 1272 of C, right? A times 1.272 equals C. If it gets a little feisty, then we'd be down here about the 207, 206 zone. So look at the math here. To get to 208, and we're at 214, that's 600 plus pips. Plus we were way up here at 216. Shorted it, got into position of authority. We're watching it go against us. That's why if it pips us out, great. What happens if we close above the pink box? We're going to 217.50, maybe 218. The 217, 218 zone. High probability if we get above this. We get above that, then it's a high probability. Right now, we're failing at the 618 zone. That is not bullish right now. That suggests impulsive first move, three-wave correction, second move, ultimately push lower low. So that's why we went short here, and we're staying short until if we get pipped out, we go up here and we short it again. But that's setting up for another push lower here today, tomorrow, next week. I get in those positions. I'll let the trade management system run the trade and do its thing. So any questions? Be careful on this rally. What if it breaks out? Then again, we get pipped out for more profit, love profit. And then we look to short it when it gets near that 217, 218 zone. Other than that, it starts turning back down. We're still in it to win it. And we continue to add more pips to the bottom line. All righty, let's move on. What about the markets? We have some unbelievable kind of discrepancies here. Prior high to low, you break above the 618, you have a 75% chance you go here, 70 plus you go here, and we didn't stop there. We went up and blew past the 1618. This run was the biggest run we've seen since before I was born. They said this run was bigger way back into the 1950s. I wasn't even born in the 50s, since 1950. Well before I was even in the thinking about my parents even thinking about me being born. I digress, but what's that got to do with current price act? We're going to get a correction sooner than later, but no later than later. And this most recent move, you can continue to rinse and repeat on these smaller sizes. Look how this extensions play out. Prior high to low, we broke the 618. We're going to 786. We're already testing that red line right there. We're already there. So is that enough to turn over? Or do we need maybe a little push more? Well, what's discrepancy in this case is we have discrepancy because this one didn't quite touch that 1448, but the futures did. We already did that. Been there, done that. We touched it a couple of times, and now we're bouncing off of it. So which one's going to play out? Is the futures going to continue? Is this just a little reach the extension, which you can see we reached the extension, we went up. This was last Thursday, I believe, when we closed above from the recent high to low. We closed above that 618, said that we were likely going to visit this target, 75%. And what happened? We just chopped and grind, but we went right to it. That's why you got to believe this system, 75% is 75%, ladies and gentlemen. Now that we hit the high, SPX didn't quite hit the high. Does that mean we have to go a little bit more? Maybe. Or are we ready to roll off? Well, it's possible that SPX continues and we go just a little bit higher and we push to reach that final target up there, right around that 75-60 area, and that we just get a little pullback on ES and we get one last push, and then ES pushes a little bit higher towards this 72, 75, 92 to reach its 1272. Right? So I won't say this can't possibly go higher. We're in punch junk euphoria. It's like all is good. Just keep going. AI. But the cracks in the foundation are coming. So we're due for a correction. And I've been calling for this. Back in this correction, go back a few months ago, when ES went on, break all-time high, we got the move. Actually, let me go to my daily chart to show the bigger moves. And come back here, back in April, we had the big Liberation Day sell-off. Right? We had that. Then we talked about this price action after Liberation Day, we rallied up. And then you look at the last few days since then, we got the correction we were looking for. I was really looking for it to go just a little bit lower, ladies and gentlemen. We talked about we needed to see this little move down here that would come toward what we call our 4-hour magic Fibbo line. And this was the target for us to decline to, and we were just a little bit shy. Then we expected a bounce to go on to all-time highs again. And that's exactly what we got. We just didn't quite go as low as I was expecting, just a little bit lower. Well, let's reverse the clock back to this price action over here, where we had this scenario. We had this prior move lower. ES was able to make all-time highs during this run into this year. October kind of topped out. We had a correction. Then we started rallying. The ES barely broke above all-time highs. And the whole time we started seeing that high, what did I tell everyone? We need a lower low. We need a lower low before we can go breaking all-time highs again. And the one that really set the tone for this was the NASDAQ. NASDAQ did not make an all-time high here, where this one barely drummed out a little higher high there before it went down. NASDAQ in that same October high, we didn't. We rallied and made a lower high. So for months during this period, I was like, be careful. This doesn't look like it's ready to go breaking out. This is too overlapping and chopping and grinding and grunting. We need this bigger A, B, C to play out first. And then once we get the lower low, we're going to go ripping the all-time highs. So that was the plan in April. Talked about buying that dip and looking for this thing to go higher. That was definitely the plan. So it ripped. Now what? This rip is insane. Last month plus, I was expecting this thing to start ripping back up into May, June, which we're in May, but really not go blasting off like this. I was looking for it to maybe come back to yet another lower high or a slight higher high, and then we get a big fall pullback. So this big rip is destined for a big pullback. So be careful. Yes, it's probably going to grind a little higher. It's already exceeding This initial move up times 2, we're already at the 2 of that initial correction. So what is that? That initial move, it doubled, and we're sitting there. So be extremely careful. If you're long all these things, I would definitely be taking profits and be in a position of authority. This latest run, which was expected, but maybe not quite to this quick and how far, this fast and that far, but I still got a feeling in the pit of my stomach that we're going to get a fall pullback. What is that? From May, June was the target where we're starting to hit into June. This could go in toward, July, June. It goes into like 1st of July. But the plan was to top out here and go lower in the fall. So I'm thinking we're going to get a substantial correction into the fall, especially after this incredible nonstop run higher. We haven't taken a breath. Just keep going higher. It's all about AI. It's inevitable. It's going higher and higher and higher. What are you talking about? This thing's never going to stop going higher. Well, that's what they said in 2007. Hey, load the boat. Markets are going to go higher and higher while all the big dogs and the hedge funds and all those Morgan Stanley and all of those were doing what? The short. Goldman Sachs, short, while they're telling everybody invest and go long. Well, there's another one coming. Elizabeth, I'm coming to join you, honey. That may not be the fall pullback, but I think we're probably either going to, if this thing doesn't stop, then we're going to run into Elizabeth, I'm coming to join you, honey, sooner. If we get the pullback I'm looking at into the fall, then the last blow up top, pushing us into early next year, maybe first quarter-ish. But I'd be very careful on running this up, expecting this just to continue indefinitely, because as you can see, we're far reaching those extensions off the last correction. And where's the next target? 30. I definitely think we're going to 30. We hit 30. Kind of talked about that before. Could we go up to 30 and push it toward 30,007? Yeah, that's the next extension up there. You got this one around 30,005. So could we get there? Just remember, one of these we're going to touch, we're going to start to get that correction. So be careful. What I was looking for, and I'm still thinking is possible going into the fall, is not only a nice hardy retracement, but notice this. From Liberation Day low over here to this big run up, the most recent run, Liberation Day, excuse me, is way down there. But this Liberation is run up. We got the initial move, we got the correction, now we're doing it again. This is setting up a beautiful retracement. If you look at that low, up to the current high, and maybe we go a little bit higher. See where my targets are? 130, 131. So we're already at 130. Do we climb a little bit more? Maybe. Do we push the envelope and push toward 31? Possibly. But either way, I'm looking for a 618 retracement off of that April low to whatever the high comes. I'm looking for like a 618 retracement off of that. And that would put us back around 22,000. Wow. That's pretty extensive. So you kind of think, well, I can't really see anything. So let me clean the pictures, because we go down to all time frames. We kind of show, if you're a scalper, what should I shoot for? If I'm a day trader, I'm a position trader. I trade more of the higher time frames, but I certainly read and interpret charts. They repeat themselves on all time frames. So I'm just going to clean this entire picture up and show you what we're looking at and why this would make sense for a massive blow off top and push the envelope even further. Let me get that one out of the way and get those lines off the bottom. So what do we have? 2.2. We have that low. Let me move this up just a touch, get my arrows out of the way. Give me a clean picture. We have that low, and currently we're right in this zone for a high. Look where this magic Fibbo is on a weekly chart. It is right at the 618. See it? That line right there is pushing right into that 618 retracement. What if we go a little bit higher and we push toward 131? Then that's a little bit short of that, but this could take weeks, right? This is still sloping upwards. Look at the slope, still sloping upwards. And this is a weekly candle. So what if we go a little higher? This keeps sloping upwards. And then we come back and retrace. Why am I bringing this up? It is what we call a 618 retracement. And if it happens where you get the combo between a 618 retracement and you have a magic Fibbo, which is part of the software called the magic Fibbo, if it's a combo, then it sets up the potential for stratospheric type of move. So now you use your 3-point tool. We have this low. We have the high. Let's say we go to 31 just for this case. We may not have to get that far. We could go higher, but it would say we hit 130, 31, and we come back and hit that 618 type of retracement off of that. And we end up with what? 618 retracement slash bounce off the magic Fibbo combo. Then we're looking at, even if this is a blow off top and that's the initial wave up, this is the correction, we would at least get the 36,000 for A equals C. That's interesting. And then what if we get the extension where you get the combo? A lot of times this thing will push to 1618. That's putting us in 40,000 territory. Wow. So I showed you the graphics before. When you overlay the dot-com bubble burst with this current price action, I have those charts, and it showed that in the dot-com bubble burst, we topped out 40,000 would be the dot-com bubble burst equivalent, is around this 40,000 range. So is that likely to come into play? If we can get this correction coming into the fall, right? We're already in the June territory, right? May, June. So maybe we dip and grind a little bit more, get to that 31. But as we go from June, July, August, September, October, I'm looking for a pullback. Got it? And then we get the year-end run, Santa Claus rally, ripping higher, and everybody thinks, man, the way this pullback and continuation, we're going to go to 50,000, 60,000, NASDAQ, AI is never going to stop. And then we're going to get Elizabeth, I'm coming to join you, honey. So be careful. Yes, I don't think, and I've been calling for this for all of this year, coming into this year, we're going to get a blow off top. I'm not convinced that this is definitely it. But if this thing doesn't stop and give us the correction first and continues to grind up here, then absolutely, I think we're going to, instead of get a fall correction first, it's going to be the Elizabeth, I'm coming to join you, honey style. If we get the fall correction, then we should get the blow off top going into next year. And then we'll look for 2027, all signs of a massive correction. All right, that's the big picture. What's the small picture? Take your profits. We're getting to a zone where we're already touched based on the latest moves. We're exceeding the 618786 zone. You can see that run up. It's insane, right? That's an insane run. But the last little dip, which I was looking for, going to the 4 hour. So I'll go to the 4 hour and show you. We just missed it by just a hair. We were expecting to dip just a little bit lower, and we didn't quite get it. But why am I saying take profits now? Look at this move. 2.2, recent high to recent low. We're already reached the 1618 and the 1272. A lot of times when you get these types of moves, what happens after you reach the 1272? Well, only about 35% of the time we make a continuation run toward the 1618. That's not high odds. 35? Not that great. So this is why you need to be taking profits. We already reached the extension. Last Thursday, I believe it was, when we topped out right there and closed above, it said we were going to 2994, 3,000. We did it. So this is why you definitely need to be taking profits. This thing could, A, push back to where we broke out from, to then potentially go higher, push up to here, that 1618. That's that 30,004 range. Or what's the likelihood we just continue straight up and this thing never stops? Only 35%. What's the bigger percentage chance that we get some sort of correction? We correct back to where we broke out from to continue, or we get a 618 type of retracement out of that to maybe bounce and go up to that 1618. Got it? So that's why I'm saying be careful on this. Whenever I get my extensions, I don't worry, well, it could keep going. I take my profits and I look for other opportunities. The big run on this is done. We closed above this 29,360 area right there, 618. That was earlier last week. And we made the run of about 600 plus points. And now it's time to take profit. What if it keeps going? What if? What if it crumbles? We're due for a pullback. And again, the whole goal of this, when we had that low, actually, I'm on a 4 hour, so that October low, this October high, we got this push, and then we rallied to a lower high. I kept saying we needed a lower low before we'd go ripping. All this was to plan. Beautiful lower low. This was to rally and make all-time highs, or at least a run toward all-time highs by April, May. May, June was my real target. So where are we? We did more. We doubled that. I was looking for the kind of this area here to come back toward the highs, maybe slight higher high. Then we would go into fall correction. Well, this thing did a double. What does the double mean? That initial move to my initial target was doubled to go to this target. So now, June, May, June, which area we're in, we're expecting that fall correction to come into play. So let's see how this plays out. Well, Gary, is it possible we could grunt and grind and continue this insanity through the rest of the month? Yeah, I mean, here's July right there. And this whole thing was to talk about a reversal in May, June. June could go up into July, right? June. So could we get another little dip and one more push toward that 30, upper 30, maybe 31 before we're done? Yeah, that's kind of what I'm thinking. Maybe we do that. But for today, now take profits. We're already reached the extensions. That's pushing it. Well, but Gary, it's definitely going to 34.57. It might. Only 35% chance we continue straight up without a correction. And I like to push those odds very often. I like to take my profits. We get a pullback, it sets up, then I buy the dip again. But we are looking for that fall correction. Again, a big fall correction. And what are we talking about on the NASDAQ? Same thing, which we're showing off of the weekly chart. We get this pullback into the fall, and that could potentially set this thing to go to 40,000. That fits that chart. I'll show it again tomorrow if for those of you, what is he talking about? There was a graphic that overlaid all of the price action from the dot-com bubble burst onto this current market run, and they overlapped them, and it's almost identical. Of course, the levels are way different than they were back then, but that's the equivalent is the 40,000 of this run to the dot-com bubble burst going into that of the NASDAQ then was like 15,000 or something, if my memory serves right. And this baby is ripping toward 40,000. Way different scale, but it's still the overlapping laying of that price is identical. And what happened after that? Dot-com bubble burst. And this isn't the pullback in the fall, the dot-com bubble burst. This is just one more correction before we get that last blow off top. But that could push us into that 40,000 zone, which that graphic illustrated, equivalence. I digress, but I think you get the point. What about Russell? Russell's the one that's on a different path. We're on a big different path right now, and I still think we're headed up toward 3,100. That is the plan, but do we need a correction first to get there, or are we just going to keep going? But be careful on this one as well. I still think there's a smaller scale, that high to that low. We hit the 1618, we hit the 1272, and we pushed on further. But this most recent correction, so let me go back down to a daily. We probably have a little tad more because the recent pullback shows. Let me get this guy out of here. That's going to show you that on the weekly chart. But we have the high, we have the low. We closed above the 618. My 1272, 1448 is 2940. We're just a few points shy of that. So could we continue this rally a little bit more? Sure. What's after 2940? 2960. Could we get feisty now before we get the fall pullback and hit that 3,000 range? That's part of the bubble I'm looking for. And then we get a fall pullback. Or do we start fizzling sooner? I don't think so. I think this is just going to continue to these targets. 75% we're going to 2940. 70 plus we go to 3960. So when I get there, what do? Take profits. Take profits. And what about the big pullback in the fall? Do we get one of these? This one's setting up very similar. The potential is there. So if you take, again, let me clean up all this mess for a moment, as we constantly go to different time frames and look for those levels. That's why there's so many lines on here. But that's the fun part of technical analysis. I don't get paralysis by analysis. I let price prove what it's going to do, and I take the trade. I don't worry about, well, what if it does this? What if it does that? 75% is fine with me. You can have a growing account with less than 50% wins if you use proper money management. And we teach all of that, right, Mr. Toussaint? We always go over proper money management every day. I don't start the class off without talking about it. But on this weekly chart, we got a low, we got a high. Do we go up to this? Probably. Probably going to go up toward that extension, push that maybe 3,000 range. At 2940, 2960, maybe we push toward 3, somewhere in that zone. But notice where my 618 retracement is off of that. Can't make this stuff up. My weekly magic fibbo and all of these markets are setting up a perfect place for the fall pullback. Do we get this pop here, then we get the fall pullback? And what happens if we get the low, the high, and the higher low? That pushes us in the stratosphere where this bigger target is. Where do those numbers come in? That's where you use a 3-point tool. I'm going to compress that a little bit that way and pull it back this way. And we say with the 3-point tool, well, what if you get that fall pullback, Gary, and it actually hits a 618 retracement? Well, look at this run up. We've come nowhere near a 618 retracement. That happens all the time. It is part of the lifespan and the cycle. And you get 618 retracements out of things. And looking at that low, up to this high, we go just a little bit more. And then we come down and get a weekly magic fibbo 618 type of retracement. Look at the stratospheric move. Equality, and because the price has changed a little bit since the last time I put this up here, equality is going to be right around at 3,500. Wow. What is that? Right? Just looking at this. There's equality up here at that one figure. What is that? That move up, 618 retracement. What is the, if this is the A, we get a B correction, where would C equal? 3560 area. What if it pushes to 1272? 39. Well, if we get both of these, the combo bounce, we get a move up, 618 retracement, combo meal with the magic fibbo, then you have the potential to do a 1618. Now we're talking penetrating the 4,000 range. Whoa. Could that be, we get the fall pullback, the blow off top into the fall, going in from fall into next year. And then this becomes the Elizabeth, I'm coming to join you. Well, whether it's going to be the Elizabeth, I'm coming to join you, or it's going to be just a massive correction, it's coming. Got it? So I can tell you, we reach this target, we get the fall pullback, and we go blasting off in the next year, I'm going to salivate to short this thing back down. All right. And it could even include that, Elizabeth, I'm coming to join you, honey, financial crisis. Nikkei is pushing the envelope. Everybody likes the Nikkei. It's hitting the bubble we talked about. What is that bubble? That prior little pullback. It's always about rinse and repeat. We got the high, we got the low, and we're pushing the envelope right to that 1618. Notice how we hit the 1618, 1272, and we pull back before we went on to 1618. That's why I tell you, when you hit those targets, the likelihood it just continues is about 35%. That's not high odds. It says we have to have some sort of pullback before we can potentially run up and reach it. So Nikkei, look at that for what reason? Global liquidity. So when I got my new Samsung drive, man, this thing's awesome. Got my new terabyte hard drive. I had to redo all my clean install and reinstall everything. I did some hunting and I found a couple of new platforms. And this one called Star Trader. I'm not trying to say you need to do anything with it. It's one of those I found, and it has the Nikkei in it. And I like showing the Nikkei with the software on it. We showed it on that charting platform, but look at the Nikkei. It is just ripping higher. What is about to happen when we finally get that little fall pullback? It's coming. This has been a hell of a run, extensive run. So we need a pullback. Monthly's overbought. It's flat to up, but it's still extremely overbought. What happens when it starts to turn over? You get these bigger corrections. So it's coming. That chart's telling me it's coming. A weekly. It too is up at extremes. I don't like to make habits of buying any type of asset when the software is at extremes on both monthly, weekly, and look at the daily. It too, slingshot, we call this a slingshot phenomenon. When a weekly cycles up, the daily cycles plus slingshots. When a monthly cycles up, the weekly cycles up plus slingshots, or of course in the opposite direction. When they're about to do this and they start getting a monthly cycle down, well, the next financial crisis, we're going to see a huge monthly cycle down. And you can see how this is running. Well, monthly, weekly, daily, we're at extremes. You use the recent low to high. We're reaching those extensions. So what's coming? All time frames are lining up for a turnover. 4 hours, still kind of grinding. So it's showing you, look out, take profits. All this matters. And we're going to look for the correction. So could we get just a little bit more upside? Yeah, that's kind of what we're looking at. Looking at that last little push to maybe 66. We're a little bit shy of that. So far, the high today went up to 66.7, 66,695. So a few points away. Are we likely to go touch it? We don't have to. But this is kind of the zone. We're already in the zone of where I thought we might go before then we get that fall correction. So be careful. Why is this important? If global liquidity starts dropping and we get that pullback into the fall, it's going to pull ES down. It's going to pull NASDAQ down. It's going to pull Bitcoin down, et cetera, et cetera. And that fits the picture. Bitcoin going to get one more run, and then we're going to get a correction. And we're going to do what? Head down to 30 to 50,000. My buy zone for Bitcoin is when it hits 50, I'm buying some. It hits 40, I'm buying more. It hits 30, I'm backing it up. That is going to set the tone for the next big bull run into 2028. We'll go over Bitcoin in a moment, but it fits the script here. We get Bitcoin's fall pullback headed down to 30 to 50,000. What is ideal for that move? This global liquidity starts pushing lower, pulls our markets down with it, and then we get this correction toward that weekly magic fibbo, And then I potentially set up the blast off in the next year. So we'll keep you abreast, but definitely be in a profit-taking mindset on these. We reached extensions. We typically get some sort of pullback back toward where you broke out from. At least if that doesn't hold and we retest where we broke out from, then what? Then we start looking for the next time. Where do we break out from here? All the way back at 7,000. See it? So this run up is screaming we need to retest the prior place we broke out from, or we get a 618 retracement off of that. You got the low, you got the high. If the prior breakout doesn't hold, where do we typically go? A 618 retracement. And that's right in the wheelhouse of we start moving lower and we don't hold that 618. Then we go to extensions, and guess who's sitting down here at extensions? That weekly magic Fibbo. See it? So this is why I wouldn't be shocked. I wouldn't even be slightly surprised if we get that fall pullback and we actually come down toward this weekly magic Fibbo. All right, we shall see. But again, I got the pit in my stomach says we're going to get a fall. The markets are going to fall in the fall. And the plan was to top out in May, June. We're in that ballpark. And start heading lower into October. That's the plan. Got it? All righty, let's continue. What about Mr. Tesla? It's looking like it's trying to break out. Check it out. Today's an important day, Mr. Tucson. We had the low, we had the high, we broke the 618, we went to the extensions. Now we got a new high, we retested the magic Fibbo. And today's an important day. Do we close candle body, not a wicker, but a candle body above that 618? If we do, then upside targets are going to be 461, 468, pushing 480. You know how I feel about Tesla. I think it's headed to that 550, 650 target off of this bigger move. So why are these smaller extensions important? Because it sets the tone off of the recent high to that recent low. We take the 618 out, 786, we take both of those out. So this we kind of wicked up there, didn't quite close, wicked up there, we kind of tested it. Now we got a retracement to the magic Fibbo. This is typical. That happens. And this run up, we break that high, which breaks the 618. And our extensions become extremely high probability. What does that mean? We're going to close above the 786 and reconfirm where we're headed. Remember I said 550, 650? There it is. There's 550, 600. And then you look at extension up there, potentially as high as 700. So do I think it's going there? I do. I own TSLL. We've done very well with TSLL over the years. Way back in 2024, when we got this pullback over here, or early 20, actually it was over here. This pullback over here, when I said in October of 24, I made a bold statement. I don't do predictions. Everybody and their brother predicts. The weatherman predicts. My gardener predicts when the roses are going to bloom. Meat department, everybody predicts everything. Predict the game, predict. Well, I'll leave that to the prophets. I anticipate with the best of them. Why do we call our software the Market Price Anticipator? Because it anticipates market price. This is part of it. Fibonacci's built in it, software, etc. We got it going. So, made a statement here. Didn't do a prediction, but I made a statement. You might consider on October 24th, right over there, that actual day, I made when this was below $10, price was around $10 right there in October. And I said, you might want to consider TSLL, no buy, sell to hold, but Tesla's expected to make a run to 500. So you might consider this when it went from below 10 up to 41. Not too shabby. Well, now we're expecting another big run. When Tesla runs up to reach that 550 area, I'm expecting this to be in that 27 to 32 zone. If Tesla can start ripping higher and pushing 800, then we'll probably go toward the 40 range. But what do you mean you kind of said that? Replays on demand. We record all our shows. You go back to October of 24. Whoa, past it. Little too quick there. October 24. Expect Tesla to hit 500. Consider it a TSLL trade. How about that? How cool is that? So what did it do on the chart? It did that exact same thing. So let me go back to my Tesla. It ripped, and TSLL did what? Quadrupled. I like it. So I made another statement down here when this thing overreacted and went all the way to $6. Man, this thing's at least going to push toward the 20s and get like a 50% type of retracement. And when it did that, what did I do? Another quadruple. Took profits. Now I bought low again. What am I expecting this to go to? 27.30. So this is still a double, still looming out there. When could this hit there? Might not be until, we get the fall pullback, we pull back some more, and then we go blasting off in the next year, we get up here. So I'm not talking about, well, you better buy today because tomorrow it's going to be doubled. No. But the plan is we're going to start ripping that way when we get that blow off top. This is going to push Tesla and the rest of them higher. And this is kind of the conservative target. If Tesla can reach its 550 to 650, this is the zone for TSLL. And if we can go blasting past that towards that 8-9, then we could start pushing extensions and maybe get up here. What's this target? If Tesla starts pushing 1,000. Tesla pushes 1,000, then I expect to be up here. Might even be a little bit higher. But I like these leverage products without using options because I have time to wait. You pay a little fee, but while you're paying a fee because to own it, you also get a little dividend checks along the way, 11, 9, 10, 60, 58. And you get some dividends here. So yeah, you pay a little fee for owning this ETF. There is a fee involved, see if I can find it. Less than 1%, 0.83%, but then it's compensated by getting some dividends along the way. So I don't mind getting a little something extra on the dividend side while I'm waiting for this thing to play out. And you take profits, use that money to buy it again, take profits, use that money to buy it again. And we're already in profit and we're looking for more profit, but it might take a few months, might take until the fall, might be next year's blow off top. And it could turn into not only blasting past this, but opening the door to extension. When do I get confident it's going to go up to here? We got to get above 28 and especially close above 34. Then the probability we go to 46.51 becomes extremely high probability. 70%, 75, we go to this. 70 plus, we go to that if we can clear this orange hurdle. Why is that not pink for resistance? It's orange, or just yellow, I should say. It's because it's the cautionary zone. When we get there, I'm definitely taking profits. Do I leave some shares to go higher? Yeah, I probably will. I'm going to see what price action does up here. But I definitely think this is where we're headed, no question. It probably won't be, depends, we get that fall pullback I'm looking for. I don't see this thing ripping up there when everything else is tumbling lower. What Tesla does, TSL is going to do with a little leverage on it because it's 2x. Got it? 2x ETF. So I digress, but I still think this is another high probability target. This is my target zone where I take profits again. And then what happens if we close above here? Then I'm shooting for 46.51, maybe even 63. But in order to get to 63, we need Tesla pushing 1,000. All righty. So let's continue. Everybody's worry and wonder is, what about black gold Texas tea? Mr. Tucson, look at this. We talked about this in pretty good detail. We call this a squeeze. It's the most unreliable of all, other than the fact that whatever the mouth of a squeeze is, price ultimately plays out that direction, either to the top side or to the bottom side. So if you do the length of that initial move on March 9th and 10th, insane price movement, right? Insane price movement in 2 days because the Strait of Hormuz is closed, blah, blah, blah. Well, there you have that. And we're either going to pop and go up or we're going to drop and go down. And what did I say about these? A lot of times they will give you head fakes. So that's another thing to keep in mind. Is this the head fake? Oh, we're breaking down. Oh, Gary said if we start breaking out of this thing, excuse me, lower, we go here. A lot of time it will give you a head fake and actually go higher. Or it acts like it's going to break out and it goes lower. But the plan is either price to get up to that 140, 150, or price is going to get down here to 60. Got it? That's a big, huge range. Well, so is that. And this squeeze is setting up one or the other. The question is, do we head fake this way and go up this way? Do we head fake that way and go up that way? Or do we actually just go down and then we break out and we go up? That's why it's kind of a coin toss. The ultimate play out of that scenario is very high. But it can be head fakes along the way where you think, yeah, it's definitely going to 60 and it goes ripping to 140. Or it breaks out this way and starts pushing 110. You know, it's definitely going to 140, 150 and it head fakes and comes down to 60. So there you have it. I'm going to keep these arrows on the chart. What can happen in the interim? Candle closes are important, as we talk about even with the 618786. So rejection wicks, candle body closes are important. Could this thing just been a little head fake here and we just continue this for a few more weeks and chop and get tighter and tighter and tighter and tighter and tighter, and we push towards that July time frame, and then we go blasting off or we go tumbling? Well, if they come to an actual agreement and they say the Strait of Hormuz is open, we got a big agreement, this thing's going down. If they do one of these, well, we're not, and we start bombing again, we're going up to 140. So we'll see how this plays out. Be careful. Be aggressively taking profits. But this little head fake, be careful with that. We could easily grind back up here and continue this sideways chop and slop until we finally break one way or the other. So I'm going to leave these on the chart. Why is that? It's the length of the high to the low. So on any starting platform, find out what your March 9th, Monday, the 9th of March was, and then find out what your low was on Tuesday, March the 10th. Draw your lines into a wedge. Got little pokes here and there, but that's part of this compress and compacting the channel. We call it seed squeeze or just a squeeze. And then once it finally breaks, and again, it could be a head fake break or a head fake break down and go higher. But once the price action finally plays out, whether it breaks down or breaks up, head fake or not, we're typically going to go to 140, 150, or we're going to go down to 60. Got it? Any questions? In the short term, I'd be very aggressively taking profits. It depends where this closes. And again, even if this thing reverses and it closes outside of this box, we've got those before. We got this one that I had to draw the line somewhere as you look at the spikes and the drops and this and that. And I just kind of put it here because this kind of fit the mold where we've been holding. Is this little wick out like some of these other wick outs? And we continue the chop and grind. That's more logical than a true breakdown just now or a true breakout just now. But hey, rockets fly, it's going to break out. They shut it down and they say that this is over. We're in 100% agreement. This thing's going to break down. In the interim, take profits aggressively and be quick draw McGraw, because this thing probably will just chop and grind in here and puree people until we get that or we get this. And what's going to elevate it either way? Rockets flying or the agreement's been made. And I digress about oil. There's a thing called supply and demand, economics 101, common sense 101, that if you have a huge supply of something and no demand, price is going to go plummeting. You get a lack of supply and a huge demand, GLP-1 drugs, right? They couldn't even supply them. The demand was high. Merck, Lilly, Nordisk, what's that? Novo Nordisk. Didn't have the supply, those GLP-1 drugs, and price skyrocketed. Well, I digress. What's this got to do with oil prices? Well, in the United States, we're producing more oil than Saudi Arabia plus, ready for this? Russia. We're producing more oil than Saudi Arabia plus Russia times 2. We've never done that. So our supply is heavy. You throw in what happened in Venezuela, we're getting millions of barrels a day out of Venezuela. We have tons of supply. Now, why is our gas prices going higher? I think it's terrible. Market makers are doing that. No reason whatsoever for the United States gas prices to go higher. Yes, in other countries, globally, sure. That's not going through the strait. Of course it should go higher. The supply has been dramatically reduced. We're the opposite. Our supply is dramatically increased. And the goal with the drill, baby, drill is to times 3. We're going to produce more oil than Saudi Arabia plus Russia, and we're pushing times 3 times what they're producing. Why is our gas prices going higher? Be careful. Inflation is still around. What do we look at for inflationary pressure? Here's the Fed rate, 2-year maturity rate, Fed fund rate. They cut rates down here, and then they've been holding ever since. What did I say going in this meeting? They're not going to change it. What about the new guy? He's going to cut rates. Looking at where we are and where this thing is, unless this thing starts dropping lower, I can't imagine him cutting rates. Inflationary pressure. If oil prices start spiking that 150, 200, could even go as high as 250s, which is insane. But everything else is insane. So if that happens, this thing's going to go ripping higher. What happens if we start getting above this zone over here? Fed rate, and we're a point above in that zone, about a point of that Fed rate, and we're above it, then the Fed's going to start raising rates. What does that do to the markets? Markets love, especially the NASDAQ. They like low interest rates. So you cut rates, they thrive in that area. We start raising rates further, it's going to have a little knock. So the markets probably won't decipher that very well. They were hoping they would get a market, cuts, some rate cuts. Come on now, let's get those rate cuts. But this picture dictates that we're not going to get one. And this goes back to the COVID financial crisis, 2007, dot-com bubble burst. Whenever the blue line, which is the 2-year maturity rate, races off, the Fed has to raise rates to chase it. This blue line starts plummeting, and the Fed has to cut rates to chase it. So a lot of people thought, well, the Fed makes decisions whether to raise or cut rates. No, they follow this scale. When this baby runs, they raise rates. When this baby drops, they cut rates. What happened over here? This is my favorite thing. Janet Yellen. It's transitory inflation. Transitory. Yeah, transitory, right? And instead of raising rates when this thing started taking off, it was transitory, transitory, transitory. And this thing got out of hand. It pushes, a point or two higher, and we were trying to catch up. So what did the Fed have to do? Raise rates faster than they ever have. Look at the slope of that line. 0.75, 0.75, 0.75. Back to back to back to back. I mean, it was insane because it was not transitory. So I warned about this. I said, either we're going to get Elizabeth, I'm coming to join you, honey, we come way down, or we get this second kick of inflation. What would do it? Gas prices and oil prices ripping. And that's still out there. So we could see our rates increase, not only a 0.25 or something like that, we could raise rates a few more points. He said it would never happen. It happened during the financial crisis over here. We were a little bit higher than we were. And it happened over here in the dot-com bubble burst. Why do I bring this dot-com bubble burst out? Because that's what the markets are kind of mimicking the price structure. Maybe we get our interest rates to mimic that as well. Then we get the Elizabeth, I'm coming to join you, honey. And then, of course, yes, we'll have to cut rates to stimulate the markets again. But when inflation is running out of control, you have to raise rates. When the market is tumbling and crumbling, you cut rates to help stir the market back up. All right, I digress, but this is something to watch. And we've been very accurate when we talk about, is the Fed going to raise rates? They're going to cut rates? What are they going to do? This picture, because we blowing past this Fed current rate, that's orange line. It's an average because it's 3.75 to 3.5, net 3.64, but that's why it's a kind of in between. And this runoff is not conducive to them cutting rates. And if we get above this scenario over here, remember last time this made Powell, when he did that cut going into the election, I thought it was more political than anything. He overshot on that, and this baby went ripping back. Then he was like, ooh, did I make a mistake here? Did I make a mistake? And he was sweating bullets. That's why he held rates for so long. Then what happened? We started to tail off. So then we started lowering rates again. Great. Now what? Every time we lowered rates, this thing starts to rip. So this picture is not conducive. He cut rates and was nervous here, but look how long he held rates as this thing started to tail off before he finally cut rates again. I don't see them cutting rates when this is the picture. And this continues higher. We started breaking above this zone over here, start pushing that 1% above the rate of the Fed rate now. They're going to raise rates. And what if they raise rates? It's going to start to make the markets give us that pullback. So is it hand in hand? Maybe. Do we have to have rates start raising rates in order for the markets to get that pullback? No, absolutely not. We can in fact get a rate cuts, which is extremely unlikely, and we still get the markets to pull back. That's technical picture. So finishing up, watch this very closely. One way or the other, this thing is playing out. Rockets fly, we're going up. Otherwise, we're going down. We talked about the technical picture way over here. Right, Arrow, we were pretty accurate on all this, getting the corrections, and we said we're more likely need to come down and make a lower low to clean this overlapping chopping up, except for what? Rockets fly. And I was making a statement way back that if we can get this low, man, I was going to go long big time because we were going to make a run to 100. What is that run to 100? Anybody want to guess? From the recent high to the low, it was that 618 retracement. And these are not exactly online. They've been moved, but kind of move that. And let me get that initial move. These are kind of off center, but it's right around that 100. Amen. So that's what I expected. I was expecting this dip first, but I did say if rockets fly, we're going to 100. Boom. 618786 retracement. If we can start clearing back above that, where are we going? 140, 150. It's obvious. Where's that arrow go? Right to that target zone. Can't make this stuff up. So what happens with this squeeze over here? We get rockets flying. We're going squeezing, all right. We're going up to that target zone. That's the highest probability, right? We close above that 618, kind of stating we're likely going up here until when? Rockets fly, we're there. Well, where's that 250 come into play? That 250 comes in when you stretch this out on the big chart, like a monthly, and you use this low. This is a COVID low, obviously, when everything was shut down, so oil prices plummeted. What happened to oil price? It wasn't supply. Well, everything was shut down, but there was no demand, so prices plummeted. And this is on the futures market, so you can see that it went negative there. That was like, how do you go negative? Well, that's futures for you. And then boom, we got the initial move up. We got the correction, 618 type of correction off of that. So what does that tell us? 250's on the chart. Look at that 1448 up there. 250. Huh? Yeah. That's insane, isn't it? 250's on the chart, ladies and gentlemen. There's no way oil and price can get to 250. Oh, yeah. It's certainly on there. It's possible. I'm not telling you that's what's going to happen. No, but it's not out of the question. So why 150? You can see the smaller scale, that high to that low. There's our extensions. This is where we're headed. Now we got the squeeze right to that same target. What if we come lower, right to my original target? So there you have it. Let's continue. What about gold? Still think gold's going to break down. Be careful. We had this initial correction. When this started happening down here, this was not complete. Too much overlapping. And I said this, well, that could be my three-wave correction. We're ready to go break out. Some people would say, well, yeah, Gary, look at that. That's an A, that's a B, and that's a C. That's beautiful proportions. I mean, why isn't that the correction? Because once we corrected, look at this mess. Went up, went down, went up, chop, chop, overlap, chop, chop, overlap, chop, chop, overlap, chop, chop, overlap. So what does this look like? Since this initial move in correction, this is the first initial move. Now we have what? Push, push, push. That's the A. This correction up is the B. And as long as we stay below 5,000, what did I say? We're working on C down. Working on C down. And this is the initial 1, 2. We're working on 3 down, 4, 5 to finish this ABC correction. What are we looking for? Well, my big time buy zone is when we make a low below that swing point low, that was 4,098. So we start dipping into the 4,000s, I'm going to nibble. Then when we start pushing, my ideal target is 39 to 3,700 is ideal zone. And that's buy more gold. And if we push any lower than that, get on your knees and look to the heavens and say, thank you. And buy even more, because the next big run up on Mr. Gold is going to be 7 to 10,000. Well, let's go back in history here. Well, Gary, what do you know about gold? In the archives, I made a statement way back. Actually, I got to go to a monthly chart. When we were topping out around this 1900, I made a statement that it said we have to go to 1,000 before we go breaking out to 3,000 and above. Took years, grinded and grunted, but what did we do? We went to 1,000, right around that 1,000, dipped its toe into 1,000, and then what happened? Went ripping. Now I wasn't expecting us to get to 5,500 out of that. I said 3,000 and higher, but this thing overreacted. That's fine. That was great. We're in that trade. Loved it. So what else is new? Now we start looking on the most recent gold train. Remember gold in last year going? Man, it would never stop every day. Gold just kept chugging and chugging and chugging and a little retracement, chugging and chugging and chugging and chugging and chugging. And I warned you coming into this, we'd get that bigger correction. Started off here, thought we'd get a little bit deeper, but we didn't. And we finally broke out. Warned you about the correction there. And now the most recent one. So we've been doing this pretty accurately. And this is really screaming. We're going, we need this overlapping chopping action needs a lower low to clean this up before we can go ripping to all-time highs again. Amen. So be careful. Any rally should be sold in the short term. What is short term? I don't know. Maybe it fits with Bitcoin. This thing starts to decline going into the fall. We get that final push toward 3,700. We get there. Anything below 4,000, because as far as the technical picture, all you need is a lower low. But my sweet spot of the lower low is at 3,700. We get there. I can't tell you what to do, but I'm buying gold. It pushes lower. I'm buying more gold. If it pushes anywhere near, which again would be, I'll get on my knees and thank the Lord above. But if we can get anywhere in the mid 3,000s, make that similar type move of a weekly magic Fibbo retracement. Whew. Man, we get anywhere near that weekly magic Fibbo, back the truck up. Because this thing is blasting off, and we get anywhere near here, we're talking minimum double to 7,000. And we get into these threes, we're talking could triple, getting toward that 9,000, 10,000, toward the top of the bubble. So where's Mr. Gold going? 7 to 10. 7 to 10 up here. You see my big bubble. I think it's going to take a little bit to get up there, but that's the plan, to get up here in that bubble. That's 7 to 10,000 range. Everybody good? Is this a high probability target? You betcha. I still think we got to go lower low first, then we're going to go rip it. Amen? So no buy, sell to hold. Can't tell you what to do. I'm not a certified financial planner. I don't even play one on TV. But once we get to that zone, not a bad idea. Like I said, when we got to 1,000, not a bad idea. Well, I'm doing it again. Rinse and repeat. We get to 4,000 and lower, start nibbling. The lower we go, keep going. And buy the dips, buy the dips, buy the dips. And the lower you go, keep buying. Because we're going to end up here. Highest of highest probability. All righty. Mr. Silver. Still think silver. You got to be careful with silver. Look at that big rejection wick. We're going lower low on silver. That kind of is the need for this as well. I don't think we're ready to go breaking out. Silver is going to have a massive breakout. But based on this price action, what did I warn you when it was like silver's just ripping higher? Were we in that silver trade? Talked about it. Man, you need to be long silver. We're going. We got this overshot. And I warned you, so when you get these crazy parabolic moves, you typically get about a 50% retracement off of those. Lose half of the value. And this low, I don't think is the low. I think we still need another lower low. So where do we go? I would love, again, I got a thing going for this weekly magic Fibbo retracements. I got a thing for that. So do we get there? I don't know. If we can get into the 40s, that is back to truck up territory. We need a lower low, so we need to get in the 60s. Anything lower than the prior lower low is nibble zone. So we start dipping the toes into the 50s. That's certainly a buy time. We go in the 40s. We start to look to the heavens and go, thank you. We get anywhere near this magic Fibbo on this weekly chart. Like last time we dipped and bounce off of that, we did that. We can dip down in here again. What's the target? 150 to 200. Wow. Mean we could buy in the 40s and 4Xer? Yeah, and then some. So that's the plan. All roads, whether we get the bigger dip or not, or we just go back and make a slight lower low, is to go up here in the next few years. And I'm not trying to say, well, he's got 27, so he's expecting by the end of the year, we're going to dip down here and be up there. I mean, anything's possible, but no, I think it'll take a little bit longer than that. It took years for us to grind up into that, so it'll probably take a couple of years to get up there as well. But this is extremely high probability target. Whether we get the deeper correction, the deeper the go, the better the prices will be. But the plan is still the same, 150 to 200. Amen? All righty. Let's finish up with a little Bitcoin. How about the Bitcoin? Well, we spot on with this one. Back in 2022, I couldn't have been more adamant. No buy, sell to hold, because I can't tell you what to do, but I was sending signals. Bitcoin below 20,000 is committing a crime buying Bitcoin below 20,000. It's a steal of a deal. You don't buy it down here, and this is when blood in the streets. Sam Bankman-Fried of crypto is a scam. It's this, it's that. Yes, it's all about that. That's when you buy. That's the zone. The zone this time around is 50 to 30,000. Bitcoin hits 50,000, we buy. I'm buying Bitcoin straight up. I'm buying some leverage. I'm buying some ETF. I think I'm going to go on a buying spree. And then what am I going to hold it? 22, we topped out in 25, 12 to 18 months post-halving to the month. Right at 18 months. Now, typically we make a crypto winter low about a year later. So I'm looking for this to be in the fall. So is this gold prices are going to dip down while Bitcoin makes its last run? And then as Bitcoin starts falling in the fall, gold starts rallying. And then we look for that. And then we say, well, Gary, what happens when we get here and Bitcoin starts ripping? Gold and Bitcoin can rip in the same direction. They certainly can. So I want you to think, was that how's gold going to get to that 7 to 10,000 when Bitcoin gets down here? It's ripping to 200,000 and above. What do we do? Well, trade them individually, but this is the plan. 50,000, nibble. 40,000, nibble harder. 30,000, anywhere in the dipping the toes in the 30,000s, smorgasbord. And bingo, we start ripping. Next halving is April, May of 2028. And we're looking for 12 to 18 month run post halving. And the target's up here around 200,000 and above. So just like this, no buy, sell to hold, but only thing you can hold against me, if you will, is that I was thinking 150 to 175, and we went to 126, 129, 126. So I'm sorry, I was a little bit shy, but if you invested below 20 and you got out at 100, 120, I think you're more than happy. 6X, and you're bitching, you missed it by a couple of points. What's that? Pigs get slaughtered? Yeah. Bulls make money, bears make money. That's the only thing I believe in Kramer. I like the Kramer effect. When Kramer says buy, 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 I sell, 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 sell. And when he says sell, 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 I buy, 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 buy. But I do believe in that scenario. When this was up here, like, well, no, Gary said it's going up here. I'm going to lose everything until it gets up here. No, you take your profits. I like taking profits. And then we get this. So buy zone, 50,000, you nibble. 40,000, if we get there, you start loading up. And we get anything below, dipping into the 30s. That is a back the truck up scenario for this thing to do just what it did last time. Starts climbing high. This was unique because we introduced ETFs here. In the history of this Bitcoin cycle, we've never broke all-time highs going into a halving. It was always kind of chop and grind into the halving, then the vertical move post-halving. Well, this changed slightly because of all the ETFs, but notice every other one, we didn't go ripping to all-time highs until after the halving. We didn't go ripping to all-time highs until after the halving. And these look like they're just flat lines and there's no price action in there. But believe me, you stretch this baby out and it's a massive move, percentage-wise and everything else. It doesn't look like a whole lot there, but the more you stretch it out, back in the day, this thing went from nothing to something in that 12 to 18 month parameter. And I'll stretch that out just to show you what that looks like. It went from the single digits up to 1,200 or so. And as it hit halving, we were sitting here at 14 bucks. Would you like to buy Bitcoin at 14 bucks down here and then sold it at over 1,000? Yeah, rinse and repeat. And notice every time we topped out, that was in 13. Then we topped out the next year, 4 years later, in 17. Can't make this stuff up. 17. Then we topped out in 21. And what did we most recently top out in 25? 4-year tops, 4-year bottoms. So where does the 4-year bottom bring us in? 2026. Where is my next top? From 25, 4 years later is going to be 29. So just like we said here, buy in 22, sell in 25, buy in late 26, sell in fall of 29 when it's up at 200,000. Amen? So any questions? I still think, let me go to the current price action. I still think Bitcoin's going to make that run. This would fit better, and even poly market in those kind of have a higher percent chance. We're going to dip to this 618 level right around my 70,000, 72, 70,000 range to then bounce, make one last push into July. This was kind of the plan. I drew this on the chart months ago, and I kind of expected we would top out in that June, July timeframe. May, June is kind of the target, but remember, June goes up to July. So is this the high and we go down here? Don't care. Do we go higher into this zone and then we go down here? Don't care either, right? When we get to 50, I'm buying. We get to 40, I'm buying more. We dip our toes in the 30s, I'm loading up on Bitcoin straight up, buying in a crypto account, or buying some ETFs if you want some with leverage. Got all of them for you. Straight up ETF, leverage ETF, or straight Bitcoin. Again, I'm going to do all the above, but I'm looking for this thing to do the same 2022 up to this target, while my 2026 low is 50 to 30,000 range, and we're looking to go to 200 plus. All right, what if I'm shy again and we buy at 40,000 and we stop at 180? Wow. That would be a terrible investment, wouldn't it? A triple, quadruple? I don't think that's bad. I'm just teasing, of course. 40,000 investment and selling it at 180 or higher, that's a tremendous investment. But that's what's coming, in my humble opinion, of course. So do we get the last push into June, into July? Then we get the fall sell-off. That's why I'm kind of thinking the fall's going to have the markets correct, Bitcoin's going to correct. And then when we get down in here and Bitcoin starts to recover, we go into the next halving in 2028. So we're going to buy in this 50, 30,000 range, just like we did in the below 20. And we're going to hold till we get near my target. This time we were just a tad bit shy of that 150. But hey, still a great investment. Now we got the same cycle post-halving into next, actually 2028, which I got to go to a weekly chart on that to show it to you. But this is the next halving scenario. And what happens every time post-halving, 12 to 18 months, this thing goes skyrocketing. Could we see something like we did last time, where we get the low and we start going into the halving and we're breaking highs by then? Maybe. I mean, that's a one-off, but we did it last time, right? We got the halving, the ETFs came out, and we broke all-time highs going into the halving. No wonder after that run up, we called that the FOMO run. We planned this, expected it. When these ETFs, people were going to have FOMO of getting in on it, and it would run, that we got that big correction coming after halving. Do we get that again? Mr. Tucson, we get down in here, we go ripping by next 2028, and we actually make a slight higher high. Then we get a correction coming into the initial phase, and then we go blasting to 200. Or do we do typically just kind of chop and grind up to the halving, then we rip? Either way, in bottom line is my anticipated move is 200 and above. And my bottom line on the low side is somewhere between 50 and 30. And in the short term, once again, I would like to see this thing pull back just a little bit more. And even poly market, which I don't even pay attention to most of that stuff, but they have a higher percent, 75, 80%, 86, whatever it was. I was kind of just forgot what the number was, but they think it's going to go to 70 range, 72, 70, right where my, 618786 is. Emil can't make this stuff up. And what happens? We then go wham. We push up into July, and then we get the fall decline. Well, be careful. This is not a guarantee we're going to get that. I did expect off of that low, we'd have a run into May, June. Guess where we are? May, June. So could that be the end? Maybe. We don't hold the support zone. We break below it. We're on our journey down to this here, and we don't reach this. But I still think we're going to get that last rip going into July. And then people are going to get all excited. Buy Bitcoin, man. It's going to 300,000. Yeah, buy. And then it's going to sell off big time into the 50 to 30. So what I've been saying from the very start, I don't care if this thing would dip down here tomorrow. Hits 50, I'm buying. Hits 40, I'm buying more. It dips its toe in the 30s, I'm buying as much as I can. And I'm going to hold on until 2029. And this thing is going to go ripping what? To 200, in the 200 range. So in closing, take care. God bless you. I love and appreciate you. This is a very high probability target. Do we get the final push? It would make sense that people are just stirring on the thing and go, yeah, man, it's the way to go. I'm buying Bitcoin at 100,000. I'm so smart. It's going to 300,000. And right as they buy it, they watch the pain come in and goes below 50. They get a 50% haircut right away. It touches 100, they buy, they think it's going up here, and then it rips down here to 50 or lower, and they're feeling the pain. Buy 50, buy more at 40, buy as much as you can if it dips in the 30s, and hold it till 2029. So whether we don't make this going into July, we did kind of have that run into May, June. What I was looking for, do we finish it up to do this, or do we do this? Still think this is a high probability. I'm not convinced that's the low and we're ready to go blasting off yet. I'm more convinced we need another swing point low to then get the run. So that's the plan. So again, with that, I'll say good luck. God bless you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.